As I have said before, the day after an FOMC meeting can be amazingly orderly to play on the Nasdaq. This time round, the FOMC meeting minutes were to remain on hold. This was what was planned, and that was what was delivered. A no surprise event for the markets, and Fed Powell, the chair of the committee, kept the market extremely calm. The bigger external factor for tech this week was the DeepSeek claim that it was able to do the work of OpenAI more than 80 times cheaper. Now that sent the Nasdaq into a tailspin only one day before the FOMC meeting, and one can only imagine how this could all go. In this video, we're going to take a look at our little genius Lockie trade. This is the trade we do the day after a Federal Open Market Committee meeting. So, before we get going on our trade, we look for the HPCT and the LPCT, or the high and low previous close targets. These price levels are little spikes in yesterday's NQ volatility price action that highlights where the index is likely to retest and potentially break out today. Now that we have our HPCT and LPCT price levels worked out, we check these price zones and confirm them in the Quantico Cap dashboard. A nice feature of the dashboard is that it's showing us these futures volumes levels for both the upside and the downside already. And we know the auction nature of the market will likely test these two places. That's the trade effect we're looking for in this opportunity. A quick check on the volatility gauge from yesterday, and you can see, wow, this was a typical noisy day, which doesn't surprise me on an FOMC day. If we look at our gamma walls, well, they are above our current price, and the Vanna has a nice upside breadth in it. Additionally, the gamma heat map is showing, well, a lot more options in the call space, far more than in the put space. Given we ended up in the neutral zone at the close, right on base, again, very typical indeed, the upside has a higher probability of playing out. Now, let's see how our trade worked out. We did indeed test the lower previous day close target. Ironically, a very typical outcome before the upside scenario plays out. Importantly, we must not break this price level. Then we travel back to VWAP, gaining 200 moving average support before the 821 convergent signal fires. If we breach the upper level, this could see us have a huge rally. That's what we're looking for. And guess what? That's what played out. It was an absolutely massive outcome for a retail trader in the know. Nice and orderly, and it carried higher when the European daybreak window came into play. So there you have it. Another wonderful genius Lockie trade. And just to summarize what we did to capture this opportunity, we went through 3 steps. Step 1, mark up your charts for the HPCT and the LPCT price levels. Step 2, review the Quantico Cap dashboard for probabilistic indicators on which breakout direction is most likely. Step 3, remember to play your trade in line with the VWAP rules, using the 821 convergence cross as a major signal to get involved with the setup. Now, just one thing before we go. We're having an event in Dubai on the 24th and 25th of February, where we'll be going through these types of strategies and showing off the benefits of the Quantico Cap dashboard and so much more. Check out the link below for more details, and most importantly, have the best day ahead.